We're going to continue our example of a process costing report using the weighted average method, but this time with transferred in costs. In my last video, we dealt with Cookies Inc., which manufactures chocolate chip cookies, and we focused on the first department, which was mixing. Using the information available from the question, we developed a process costing report for the mixing department. Notice that the structure of this report is only for the first department in the manufacturing process. Once we've completed this report, we did an entry to move the costs from the mixing department to the baking department, a debit to work in process inventory, baking, and a credit to work in process inventory, mixing, for $396,000, which we calculated in our process costing report. After our entry, the work in process inventory baking department had an opening balance of $84,870 for the inventory, which was incomplete at the start of the period, as well as $396,000 transferred in costs from the mixing department. In this video, we'll complete the process costing report for the baking department, including transferred in units and costs using the weighted average method. Recall that for purposes of determining the cost of inventory in the process costing system, we combine direct labor and manufacturing overhead costs into one category called conversion costs. That's because these two costs are used to convert direct materials into finished goods, hence the name of the combined category, conversion costs. Keep that in mind as we move through this problem. You have been provided with the following unit and cost data for the baking department. Physical units. Work in process inventory opening April 1st, 15,000 units. Transferred in, 100% complete. Direct materials, 80% complete. Conversion costs, 40% complete. Units transferred in from the mixing department during April, 180,000 units. Units completed and transferred out, 183,000 units. Work in process inventory ending April 30th, 12,000 units. Transferred in, 100% complete. Direct materials, 0% complete. Conversion costs, 70% complete. Costs. Work in process inventory opening April 1st. Transferred in, 100% complete, $34,950. Direct materials, 80% complete, $21,960. Conversion costs, 40% complete, $27,960. Cost of work in process inventory opening April 1st is $34,950 plus $21,960 plus $27,960, which is equal to $84,870. Costs incurred during production in April. Transferred in, $396,000. Direct materials, $65,880. Conversion costs, $366,324. Costs incurred in April. $396,000 plus $65,880 plus $366,324 is equal to $828,204. Notice something important. Transferred in units and costs are always 100% complete. That's because they were completed in the prior department, which in this case is the mixing department. In addition, we're using the weighted average method, so there is information which we do not use. Always get rid of this information first so it reduces the chances that you'll use it in error. When we use the weighted average method, we don't use the percentage complete for the opening work in process. So we strike through transferred in 100% complete, direct materials 80% complete, and conversion costs 40% complete for the opening inventory physical units. We also don't use the percentage complete for the opening work in process inventory costs. So we strike through 100% complete, 80% complete, and 40% complete. Note that we do need to know where the costs come from, so we only strike through the percentages, not the description. We now have the information we need to complete the process costing report, which we will do using a step-by-step process. Step 1 is to calculate the physical unit flow. That means we have to understand how many incomplete units there were at the start of the period and how many units were started during the period. To do the process costing report, we'll be using Excel. We need 6 columns: description, physical units, transferred in, direct materials, conversion costs, and finally, total. We start with units to account for. This is the number of units we had at the start of the year plus all of the units we started during the year. We start with the work in process inventory in units for April 1st. These are the units which were incomplete at the start of the period. From the question, we know the number of units incomplete at the start of the period was 15,000 units. So we input 15,000 units in column B under physical units. Note that these are the actual physical units which are incomplete on April 1st. We then need to add in the number of units transferred in from the mixing department during the period. We get that information from the question, units transferred in from mixing department during April, 180,000 units. We place that under column B, physical units, 180,000 units. Adding together the units at the start of the period with the units transferred in from the mixing department, we get the total amount of units that we have to account for in our process costing report. 15,000 plus 180,000 is equal to 195,000 units. That is the total number of units that we have to account for. We now move on to step 2, calculate the equivalent units of production. We now add the heading Units Accounted For. On April 30th, we had completed and transferred out units. These units have fully completed the manufacturing process in the baking department and have been transferred out to the next department, which is the packaging department. From the question, we see that a total of 183,000 units have been completed and transferred out of the baking department. So we place 183,000 units as completed and transferred out under column B, physical units. What do we know for sure about these units? We know that they are all 100% complete, meaning that they have completed the manufacturing process in the baking department by April 30th. That means that they are 100% complete for transferred in, direct materials, and conversion costs in the baking department. How do we know this? Because they have completed the full process in the baking department, which is why they are noted as completed and transferred out units under the description. Since 100% of these units have been completed and transferred out by April 30th, we can use that information to determine the equivalent units for transferred in, direct materials, and conversion costs. 100% multiplied by the physical units of 183,000 is equal to 183,000 equivalent units for all 3 columns. Note that in all 3 columns, the equivalent units are equal to the physical units because all of the units are complete. We now move on to the work in process inventory at the end of the period, April 30th. How many incomplete physical units do we have on that date? From the question information, we know that on April 30th, there were 12,000 physical units on hand. Those physical units are 100% complete with regards to the transferred in, 0% complete for the direct materials, and 70% complete for the conversion costs. We can now use this information to determine the number of equivalent units for the ending work in process inventory at April 30th. First, we enter the number of physical units, 12,000, at April 30th. Because 100% of the transferred in units have already been added into the manufacturing process, we calculate the equivalent units as 12,000 physical units multiplied by 100%, which is equal to 12,000 units. We place 12,000 units under transferred in, column C. Because 0% of the direct materials have been added into the manufacturing process so far, we calculate the equivalent units as 12,000 physical units multiplied by 0%, which is equal to 0 units. We place 0 units under the direct materials, column D. Conversion costs are only 70% complete for the work in process inventory at April 30th. Therefore, we calculate the equivalent units as 12,000 physical units multiplied by 70%, which is equal to 8,400 equivalent units. That means that 12,000 incomplete units are equivalent to the value of 8,400 completed units for conversion costs. We now add all 4 columns: physical units, transferred in, direct materials, and conversion costs. For column B, physical units, 183,000 units, which have been completed and transferred out, plus 12,000 units of ending work in process inventory are equal to 195,000 physical units. That makes sense because the number of physical units accounted for must be equal to the total units to be accounted for. If these two amounts are not equal, you've done something wrong. Start again. We can now add the equivalent units for the remaining columns. Transferred in, 183,000 plus 12,000 is equal to 195,000 equivalent units. For direct materials, 183,000 plus 0 is equal to 183,000 equivalent units. And for conversion costs, 183,000 plus 8,400 is equal to 191,400 equivalent units. We now move on to step 3, calculate the unit's production cost. To do that, we have to first determine the costs that we have to account for. Note that this is similar to what we did for the physical units, where we started with the units to account for. Here we start with the costs to account for. We start with the costs that were incurred last period for the opening work in process inventory, the inventory which was on hand on April 1st. This is again a copy from what we did when we determined the units to account for. We see from the question that transferred in are $34,950, direct materials $21,960, conversion costs $27,960, and the total $84,870. These are the costs which were incurred last period and were transferred over to this period. Note again that we do not use the percentages complete for the weighted average method, which is why they have a strike through. We enter $34,950 under column C, transferred in, $21,960 under column D, direct materials, and $27,960 under column E, conversion costs. In addition, we now include the total costs incurred under column F, $84,870. We now have to add in all the costs which were added in during April for all 3 columns, transferred in, direct materials, and conversion costs, which we get from the question. The costs incurred during production in April are transferred in costs $396,000, direct materials $65,880, conversion costs $366,324, for a total cost incurred in April of $828,204. We transfer that into our spreadsheet. Column C, transferred in, $396,000. Column D, direct materials, $65,880. Column E, conversion costs, $366,324. And column F, total, $828,204. We can now calculate total costs to account for. This is similar to what we did in the units to account for, only this time it's costs to account for, which we get from adding the opening work in process inventory cost to the started in production costs. For column C, transferred in, $34,950 plus $396,000 is equal to $430,950. For column D, direct materials, $21,960 plus $65,880 is equal to $87,840. For column E, conversion costs, $27,960 plus $366,324 is equal to $394,284. Finally, total costs, $84,870 plus $828,204 is equal to $913,074. We now have to calculate the cost per equivalent unit for transferred in, direct materials, and conversion costs. To do that, we add the heading cost per equivalent unit. This is calculated as the total cost to account for divided by the total units accounted for, which are, of course, the equivalent units. To calculate the cost per equivalent unit for transferred in, we take the total cost of $430,950 and divide it by the total equivalent units of 195,000, which is equal to $2.21 per equivalent unit. To calculate the cost per equivalent unit for direct materials, we take the total cost of $87,840 and divide by the total equivalent units of 183,000 for a cost per equivalent unit of 48 cents. To calculate the cost per equivalent unit for conversion costs, we take the total cost of $394,284 and divide it by the total equivalent units of 191,400, which is equal to $2.06 per equivalent unit. Now that we have the cost per equivalent units for transferred in, direct materials, and conversion costs, we can move on to step 4, prepare a cost reconciliation schedule. In this schedule, we determine the cost of the units which were completed and transferred out, and also the cost of the ending work in process at April 30th. Similar to when we determined the units accounted for, we have to start with the heading costs accounted for. Again, similar to when we determined units accounted for, we start with the completed and transferred out, but costs this time instead of units. This similarity is extremely helpful in exams because you can basically copy with some changes from the upper portion to the lower portion, from the unit portion to the cost portion. For column C, transferred in, we take the equivalent units of 183,000 and multiply by the cost per equivalent unit, $2.21, which is equal to $404,430. That's the cost of the transferred in units which were completed and transferred out to the packaging department. Notice the similarity with the units accounted for, only this time you are multiplying by the cost per equivalent unit instead of the percentage complete. For the direct materials, we take the equivalent units of 183,000 and multiply it by the cost per equivalent unit, 48 cents, which is equal to $87,840. That's the cost of the direct materials used in the production of the completed and transferred out units. And notice again the similarity between what we did for the units accounted for and what we're doing now for the costs accounted for. The only change is we multiply by the cost per equivalent unit instead of the percentage complete. For the conversion costs, we see the same similarity between the units accounted for and the costs accounted for. Here we take the equivalent units of 183,000 and multiply by the cost per equivalent unit, $2.06, which is equal to $376,980. We now have to do the same thing for the work in process inventory, which was on hand at April 30th. Notice again that this is similar to what we did when we determined the units accounted for. For the transferred in, we take the equivalent units of 12,000 and multiply by the cost per equivalent unit, $2.21, which is equal to $26,520. That's the cost of the transferred in items which are still in the production process on April 30th in the baking department. For the direct materials, we take the equivalent units of 0 and multiply by the cost per equivalent unit, 48 cents, which is equal to 0 costs. That makes sense since no direct materials have been added into the production process for these incomplete units at period end. For the conversion costs, we take the equivalent units of 8,400, multiply by the cost per equivalent unit, $2.06, which is equal to $17,304. That's the conversion cost used so far in the production of the 12,000 physical units, which are still in the production process in the baking department on April 30th. We now determine the total costs accounted for, similar to when we determined the total units accounted for. For column C, transferred in, $404,430 plus $26,520 is equal to $430,950. Notice something important? This is identical to the total cost to account for. In fact, if these two numbers are different, you've done something wrong. For column D, direct materials, $87,840 plus 0 is equal to $87,840. Again, notice that this amount is identical to the total cost to account for. For column E, conversion costs, $376,980 plus $17,304 is equal to $394,284, which is again identical to the total cost to account for, as they should be. If we now add the completed and transferred out costs for transferred in, direct materials, and conversion costs, we get $404,430 plus $87,840 plus $376,980, which is equal to $869,250. This is the amount which must be transferred to the next department, work in process inventory, packaging. We can also add the costs of the work in process inventory for the baking department at the end of April, $26,520 plus 0 plus $17,304 is equal to $43,824. This will be the balance in the work in process inventory baking account at the end of the period. It's equal to the total cost of those 12,000 physical incomplete units. Now, let's add these amounts together. $869,250 plus $43,824, which is the total cost accounted for, $913,074. Notice that this must be equal to the total cost to account for. If this does not happen, you know you've done something wrong. Start again. Remember that we have to move the completed and transferred out costs into the next department in the manufacturing process, which is the packaging department. The entry to move the cost of the cookies from the baking department to the packaging department is a debit to work in process inventory packaging and a credit to work in process inventory baking for $869,250. We would then record this purchase in the T accounts as a debit to work in process inventory packaging and a credit to work in process inventory baking for $869,250. Notice that the past entries to the work in process inventory baking account match the process costing report. Opening costs of $84,870, additional costs in April of $396,000 transferred in, $65,880 direct materials, and $366,324 conversion costs. In addition, the ending balance in the work in process inventory baking matches the process costing report. $43,824 is left in this account for the 12,000 physical units which are incomplete at the end of the period, April 30th. That's it for the process costing report for the baking department, demonstrating transferred in units and costs. I am now going to give you the information required to produce the process costing report for the packaging department. Physical units, work in process inventory, opening April 1st, 28,000 units. Transferred in, 100% complete. Direct materials, 100% complete. Conversion costs, 60% complete. Units transferred in from baking department during April, 183,000 units. Units completed and transferred out, 202,000 units. Work in process inventory, April 30th, 9,000 units. Transferred in, 100% complete. Direct materials, 50% complete. Conversion costs, 80% complete. Costs. Work in process inventory opening April 1st. Transferred in 100% complete, $130,890. Direct materials 100% complete, $26,060. Conversion costs 60% complete, $42,082. Cost of work in process inventory opening April 1st is $130,890, $26,060, $42,082 for a total of $199,032. Costs incurred during production in April, transferred in, $869,250. Direct materials, $192,830. Conversion costs, $363,766. Costs incurred in April, $869,250 plus $192,830 plus $363,766 is equal to $1,425,846. Required. Produce the process costing report for the packaging department. Provide the entry to transfer the finished goods to finished goods inventory on April 30th. Update the T accounts for April 30th. You now have the opportunity to solve this process costing problem for the packaging department. Be sure to solve it yourself before you look at the answers, which I have posted after this thank you. As always, thanks so much for watching. This is the process costing report for the packaging department. This is the entry to transfer the finished goods to finished goods inventory from the packaging department. These are the entries required to record the sale as well as the cost of goods sold. And here is the updated T accounts. I hope you were able to solve this last process costing problem with transferred in costs.